This is the AI News Flash for May 25, 1 p.m. UTC. First up, 24/7 Wall Street reports the Roundhill Memory ETF, ticker DRAM, has set a record as the fastest-growing ETF launch in history, sending a decisive signal that the AI memory supercycle is in full swing and institutional investor concentration on AI memory is accelerating.
The Roundhill Memory ETF launched on the CBOE on April 2, 2026, and amassed $6.5 billion in assets under management in just 27 trading days, surpassing the iShares Bitcoin Trust record of 30 days. Year-to-date returns hit 90%. The portfolio concentrates 73% of assets in SK Hynix, Micron Technology, and Samsung Electronics, with an additional 9% in leveraged Micron derivatives to amplify returns.
AI data centers consume 6 times more DRAM than traditional servers, driving structural demand explosion. Micron's latest quarterly earnings show HBM high-bandwidth memory revenue in multiple billions, with supply tightness projected through 2027. Under the 4 hyperscalers' combined $725 billion capex boom, memory chip demand expands structurally. Samsung Electronics has surpassed $1 trillion in market cap. SK Hynix approaches the $1 trillion mark, marking memory company winners. Micron's 245 terabyte AI storage SSD ships, SK Hynix HBM4 mass production accelerates, and Samsung HBM4E physical chips were shown at GTC 2026. The 2026 AI memory investment theme is a major milestone for new emerging market leaders. Next up, CISO Online features joint research from Google UC San Diego and University of Wisconsin-Madison advocating a fundamental AI security paradigm shift. Researchers urge abandoning model-centric security approaches in favor of system-level controls, marking a decisive moment in AI governance as agentic AI rapidly proliferates. Researchers Mihai Christodorescu, Erlins Fernandez, and Somesh Jha argue AI models must be treated as fundamentally untrusted components, applying 5 principles from system security, least privilege, tamper resistance of the trusted computing base, complete mediation, secure information flow, and accounting for human vulnerability. They analyzed 11 real-world AI attacks and found all violated secure information flow principles, with most violating least privilege. The team proposes 3 mechanisms: separating instructions from data, verifiable least privilege policy generation, and information flow control. Each addresses unsolved research problems in AI security, with 48% of security professionals predicting agentic AI as the top attack vector in 2026. Plus, Google GTIG reports of state-sponsored hackers weaponizing AI and Anthropic's Mythos model finding 27-year-old OpenBSD vulnerabilities. AI cybersecurity governance is at a critical inflection point. Cisco LLM security standardization, G7 nations AI, SBOM guidance, U.S. Defense Department AI model security baselines, EU AI Act, and 38 U.S. states AI regulation laws all push toward a global AI governance framework. The academic research-led paradigm shift from model-centric to system-centric AI security sends a decisive signal, positioning 2026 AI security governance as a major turning point milestone. Now, the third story, Yahoo Finance exclusive analysis by Bank of America's Michael Hartnett warns that adding SpaceX and OpenAI mega IPOs to current AI leaders could elevate U.S. market concentration from 40% to 48% of total market cap, deepening the AI trade into bubble territory and amplifying institutional investor concerns about an AI bubble. Hartnett notes the 48% level would exceed historical bubble peaks, including the Nifty 50, Japan's 1980s bubble, and the dot-com era, though remaining below the 1880s railroad boom. April 2026 U.S. CPI hit 3.8%, approaching Bank of America's danger zone of 4%. Historically, when CPI crossed 4%, the S&P 500 averaged 4% losses over 3 months and 7% over 6 months. The 30-year Treasury yield is pushing into the 5% zone, repeatedly challenging stock valuations and compressing growth stock multiples, combined with Michael Burry's $1.1 billion AI bubble put position, Norway's sovereign wealth fund warning of 35% loss risk, and Bridgewater's danger phase warning, institutional AI bubble concerns deepen. The 4 hyperscalers' $725 billion capex sustainability faces fundamental questions. SpaceX targets a June 2026 NASDAQ listing at $1.75 trillion valuation, raising $50 billion in history's largest IPO. OpenAI plans Q4 listing at $1 trillion scale. Anthropic plans October at $380 billion. These three AI mega IPOs create extreme AI-related stock concentration at $10 trillion market cap, signaling institutional investor selection phase. This marks the 2026 AI bubble investment theme as a major turning point milestone. Finally, CNBC exclusive reports Goldman Sachs published a research note recommending stocks completely unrelated to AI for investors looking to hop off the AI trade. With AI-related stocks making up roughly 45% of S&P 500 market cap, demand for hedging tools accelerates as institutional investors seek diversification against AI bubble risk. Goldman Sachs recommends its S&P 500 XAI Index SPXXAI as a hedging tool. Over the past 3 years, the S&P 500 rose 76%, while the XAI Index gained only 32%, showing AI stocks captured virtually all real market gains. Goldman analysts identify industrials, materials, and consumer discretionary as the top 3 sectors best positioned to benefit from cyclical recovery and easing tariff pressure. Amid the SaaS apocalypse debate weighing on traditional SaaS names like ServiceNow, Salesforce, Workday, Atlassian, and HubSpot, AI infrastructure second phase beneficiaries surge in stark polarization. Josh Brown's Halo trade thesis of heavy assets, low obsolescence focuses on physical asset companies that AI cannot replace. Goldman Sachs and Morgan Stanley have formally adopted this approach. Halo trade beneficiaries, Caterpillar, AutoZone, CSX, JB Hunt, and Cummins, surged 59% year over year. Deere rose 26%, dramatically outperforming the S&P 500's 7% gain. Under the 4 hyperscalers' $725 billion capex boom and extreme AI stock concentration, hedging demand accelerates. Goldman's recommendations establish an institutional investor allocation benchmark, making the 2026 AI bubble hedge investment theme a major turning point milestone. Well, that's all for this AI Newsflash.